What's up everybody? Welcome to my channel, and in this video we're going to go over a trade review on the S&P 500 for the past couple of days. There's been some really nice setups out there. We're going to go over how I traded them and how we capitalized on them as a group in my Discord community, and basically how to understand market context to capitalize on these future moves, all based off of price imbalances. Now really fast, the S&P 500, whether you trade ES outright, the future contracts, or you trade SPY options, it's one of my favorite instruments to trade. It's one of the most liquid markets, and it's one of the most followed indices because it represents the stock performance of basically the 500 largest companies in the world, such as Apple, such as Microsoft, Amazon. We could see the weighings of each sector from this chart. So it's safe to say that the stock performance will judge how well the S&P 500 actually performs itself. But my strategy uses it a little differently. I look at the S&P 500 performance before I make any confirmations of the equities that I want to trade, which are included in the S&P 500 breadbasket, like Apple, Microsoft, Amazon. You can see here, every equity that we trade is going to be very dependent on the S&P 500 and NASDAQ. So for that reason, my focus has been shifted to trading the S&P and NASDAQ first and other equities second. So I need market confirmation along with equity confirmation if I want to trade one of these market leading stocks that have a little piece of bread in the S&P 500, bread basket. You'll understand what I mean by this a little more as I break down each play. But if you're new here, make sure to hit that subscribe button down below. If you want a very good trading resource, I'm going to link my Instagram in the description below as well. I post daily trading recaps and I post very good trading tips and tricks. Make sure to follow this. The link will be in the description below. And now for Wednesday's action, let's go over the pre-market plan just to get a little more context. Now I post these every day before the market does open in the Discord room. And the plan for the S&P on Wednesday was to pay attention to the 3860 and 3854 demand zone to support us if price pulls back. We want to see buyers present, defend that area, and then they bid us higher. This 3891 and 3/4 to $3,900 zone is very strong, and if price retests it, bases at it, very likely the next supply tags at 3916, 3930. Every time we come into the zone, price fails and sells off. So keep in mind of those zones, and let's go to the chart now. So here we have the 3860 and 3854 demand zone. It was a very strong and key area that if price pulled back, we wanted buyers to be heavy and bid us higher, which is exactly what happened. So what I've noticed in this market is when they want something to look bearish, it really means to send a red flag off in your head, focus maybe on the bullish side, especially that we had demand so close. We were seeing tons of upper wicks at VWAP, which is typically a bearish sign. But because demand was so close and this was a strong level that we did tag with heavy volume in the first 10 minutes of the market open, it was a very key area that I wanted us to actually hold. So we pulled back, we broke below the low, we bounced off of demand, and immediately buyers propped us higher. There was sell-off, and boom, buyers stepped in, bidded us higher, finally got above VWAP, got above 3875. So right away, after 10 minutes from this demand, it was a nice 20-point rally, immediately. So now that we bounced off of demand, the bull confirmation is there. It's valid to take this trade long at demand. We have our confirmations, and we could target the supply at the 3891 and 3/4 zone. You could target high a day, depending on where your risk tolerance is where you should look to take profit. And it all is based off of the chart. So for me, my closest supply zone was 3891, and there was zero reason to sell this trade because 3891 was like a magnet. If you look at a higher time frame, every time we come into the zone, we sell off. So this day we sold off. The overnight session of the following day, we sold off. Going into the close, we sold off. Then before the market opened on Wednesday, we sold off from that zone. So very, very key area. And that's why I included it in the pre-market plan that if we got above 3,900, we got above the supply, I expect it to be met with new buying. Hence, we base out at it, we retest it, and the next supply will trade, higher. And if I just make this like it was trading 3,900. We came up and we came right into the supply zone. So one thing I want to mention is just because we're in supply doesn't mean you have to take the trade short. Just because we're in demand, you don't have to take the trade long. You have to understand that these zones are just areas where I want to be a participant, and price and volume will tell me when I want to be active and actually open up a position based off of what the market's giving me. So because we were in long, I was not looking to short the market. Yes, it's a strong level, but the reaction was super bullish. There was not one sign of bearish selling pressure, any type of bear confirmation. In fact, we came up to 3,900 and we based out. Consolidation, basing out means equilibrium between participants. Buyers and sellers are not agreeing on price, and the fact is that we're inside of a supply zone means that buyers are agreeing on this and sellers are not getting rewarded by bringing price lower at supply. So as soon as we got that next push up, volume started kicking in. This is another valid confirmation to take this trade long, especially that we're above supply, above 3,900. You could target the nearest supply zone. 3,916 trades, and then towards end of day when the market closed, 3,930 traded, right from our buy and balance at 3,860. One thing I want to mention here is that this is something that I know a lot of traders struggle with. When you look to take profits, if there's not showing you any signs of, pressure from the other participant, hold on to a couple contracts, ride the wave, ride the trend. That's how you could turn a small winner or a big winner into a really, really big winner if you let this trade breathe. If you looked on a 5-minute chart, no low was broken. We were making higher highs, making higher lows, and supply zones were just getting met by new buying. If you go on a 15-minute chart, from demand all the way up here, there was not one red candle for about 50 or so points. Crazy move, crazy rally. And now for today's play, the day I'm recording this video, on Thursday, keep in mind of all the new buying and how many buyers are priced in because of Wednesday's action. So the pre-market plan from Thursday played out a little differently. The areas of interest was the 3,883 and 3/4 demand zone that we were watching. It's a fairly large zone. We also had demand a little lower at 3,860. And then we had supply at 3,919, and more importantly, 3,930 and 3/4. So this is where keeping a plan will give you your baseline. It'll give you your guideline. And depending on the context of its intraday action, maybe new zones will form. Maybe sellers are super strong. Maybe buyers are strong. Buyers are weak. Then you have to use that plan and then add on to it. Maybe remove something from it. But I don't want everybody to be like a stone when they're trading. You have to be flexible. You have to do what the market is telling you, and you have to be able to adapt to the current conditions. So overnight, that same zone that we rejected yesterday, we were selling off from. We actually created new supply at the 3,919 area. If I pull up over here, we created a new supply at 3,919. So the market opened up, and right out the gate, we were super strong. It didn't look very bullish, and I did not take this 3,919 supply zone rejection, even though it was a very, very nice sell-off. So price sold off, and now, what is this? About 7 or so candles, straight down, all red candles, a nice quick 30-point sell-off from this supply imbalance. Now, this is where it's very key, and this is where it gets interesting. Every single rally was being sold into. So what I mean by that is every single dip that we got and price started to attempt to move higher would get sold into. You would have more people selling, hence price would come down. The reason for this was because of yesterday's action with all those buyers. Now that price is coming down, they're A, underwater, and B, when the market comes up, they want to sell into strength. The market is higher than where they were down at one point, and they sell once they get a quick pop. So picture this, you're down $200 on a position, when it's coming down. Now that we're bounced, maybe you're out at break even and you could sell. It's a trade that you never lost on. That's the mindset of some of these participants, and this was also met with new selling. How did I know this was met with new selling? Was because this created new supply. So we sold off from it inside of this demand imbalance. Now, there were so many different opportunities for scalping today. There was bounces off demand. There was rallies inside supply. There was drops inside supply. We bounced off of this 3883 demand zone that we were watching in the pre-market plan, and we rallied about 15 or so points into the supply that formed. Price was having a hard time moving up. This also coincided with a $3,900, the key level that we were watching from yesterday. This acted as resistance today. We priced suddenly tried attempting higher. It was a quick accumulation or distribution type of move where we came up, 3,900 sucked in some more orders. We rejected the supply and we finally broke the low of that demand zone. So I left a lot of meat on this bone. My execution today was not very good. As soon as we rejected the supply, I took it short, stop above 3,900. But as soon as we broke the low, I exited this trade. As soon as I started seeing that little lower wick below lower day in demand with volume coming in, I exited. I got about 13 or so points on the S&P 500. I will never complain about that. But exactly what I said before about letting your winners ride, this thing had a very nasty sell-off. Again, inside demand, but there's no confirmation to take this trade long as no buying pressure has really stepped in. And every single rally that we gets bought up into. This rally sold into, I'm sorry. This rally sold. This rally sold. This rally sold. Now this rally tries to move up, but we base out and we move lower. And then this right here starts to form new supply right here. So if I fast forward this little rectangle box, a little forward, look what happens. Towards 1 o'clock, perfect. Every rally gets sold into. We rally right into this supply. It's a green box, but you get the point. It's supposed to be a pink one. The supply from this basing out period right here, we sold off for a nice end of day flush. Very good move. Multiple different opportunities today. Now that we're below demand, these all become invalid. And the point here is you have to really think outside of the box, understand the market context, understand the conditions that we're trading in, and then take high probability trading setups all based off of these things. I had a trader in my Discord room. He messaged me. He needs 16,000 today off of this setup. Traded it 3 different times. And yesterday he made 14,000 off of the setup yesterday. So crazy. There's crazy money to be made if you remove all the noise. You trade your setups. You get your emotions out of trading, and you can really make a killing trading supply and demand. In fact, trading any other strategy as long as you remove the noise and get rid of your emotions. And today on the S&P 500 on Friday, no imbalances triggered. We did have a pre-market plan though. We were forming an inverse head and shoulders overnight. A break below the low at 3,800 whole number. There's really no demand supporting us until the 3,770 to 3,756. Obviously, no supply zones up here triggered, so there was no valid trade from a supply zone rejection. But we had this inverse head and shoulders where we had the left shoulder, the head, the right shoulder, and we were forming the neckline, the upper trend line, where we rejected once, twice, and then right at the open, we also rejected that line perfectly. We finally broke below the 3,800 whole psychological number, broke below pre-market lows, and broke below the head in the inverse head and shoulders. And if I go to a 5-minute chart, that upper trend line worked out. And a key sign here is failing to stay above the highs. If you were watching price react, if I actually go to a 1-minute, when we tried breaking the high when the market opened, this was, if you were watching price develop, if you were watching the tape, as soon as we got above the high, it looked like we were about to break out to the upside, but sellers immediately hit the bid and immediately, hit us down. And they were very aggressive sellers hitting the market as soon as we broke above the high, eventually got below the low, got below VWAP, and it was kind of a constant grind, similar to yesterday, but on a smaller time frame. Every single rally was getting shut down. So we rallied there, shut down. Another rally, shut down. And then we finally got below the $3,800 level, and there was not really too much downside. One thing I want to note here, you all know that I stress price and volume. Look at the highest volume of the day, and guess where that price was? That was the low of day. So price selling off, sellers or traders selling into a downside move, yet buyers are absorbing those orders. Immediately, they bidded us higher, and immediately that low was put in with the highest amount of volume on the day. Similar to what we saw on Tuesday with the V-shaped recovery. There was really nothing to it. It was kind of choppy in the afternoon. There was no setups. Failed to stay above the upper trend line again and sold off. And there was really no perfect or good setups on this today. Could have scalped it for a couple of points, but there was really nothing to it. We did have demand lower that we were waiting for it to trigger, but we never got there. So definitely a balancing day, yet there were scalping opportunities. So I'm going to end it here. I hope you all did enjoy this video. If you did, hit the like button, subscribe to my channel. If you really want to learn more, check out my website as I offer a very in-depth course. And I will see you all at the next video. Peace.